Crypto. All the crypto news in one place.
Breaking, JP Morgan will now accept Bitcoin as collateral for loans. And then you go beyond this and you see what the DTCC has been saying and what SEC Chairman Paul Atkins has been saying. I mean, we're at peak adoption, at least of the technology and of the asset class across every institution you could ever dream of. And here we are, $86,800. I mean, Tom, like everything we asked for, we've gotten. Are we just spoiled? Like, what's the deal here?
And global liquidity going into 2026, purposely orchestrated by the Trump administration, is all about printing of money in various guises, plus a big fiscal stimulus. So we've got that happening. We've got the Clarity Act coming through. Sentiment is super washed out. I mean, unbelievably, miserably, disgustingly washed out, which people now think the cycle must be over. We can't have nice things. But almost nothing went to new highs.
And having just got back from a week in the Mideast, I'm more convicted now that the future of blockchains and digital assets, real world assets on blockchains, is as bullish as it's ever been. That doesn't mean the price of you name the token is going to go up in the next 6 months, right? Being bullish on building out that infrastructure of neobanks and distributing Galaxy stock or Tesla stock or Google stock into places all around the world, that's going to happen. That's an 18-month to 3-year build-out process.
Volume on Coinbase for institutional buying has gone absolutely vertical. Look at that. That's fascinating, isn't it? What's fascinating about this, you can see every time that this institutional buying on Coinbase goes absolutely crazy like this, and this is the last few days here, okay? Somebody's buying big.
Retail is dead. No volume. But institutional, a ton. So something is happening. Secret stacking. Players around. I'm trying to, thread the needle, try to figure out who's actually buying. Well, the sharks are back. And I need to do another cohort update video where I look at all the different Bitcoin cohorts and how they've developed since 2020. And last time I did one, I noticed the sharks were stacking like mad. And they are probably digital asset treasury companies. They are not retail investors. They're people that stack between 100 and 1,000 Bitcoin. But the sharks here continues to stack hard. They bought 54,000 Bitcoin over the last week.
Eric Balchunas says Bitwise just filed an amendment for its Hyperliquid ETF. So for all the Hyperliquid holders, I have a little bit of that, which added the 8A thing, the fees and the ticker. It usually means that launch is imminent.
Bitcoin ETF outflows yesterday, $277 million. Also another $224 million outflow for Ethereum yesterday, which is basically the equivalent of $1 billion outflow day for Bitcoin as a percentage market cap. $3 million in inflows into Solana, though, so yay, winning, I guess. Glassnode says wallets holding between 100 and 1,000 Bitcoin added 54,000 BTC this week's fast accumulation pace since 2012.
He was talking with Andrew Ross Sorkin, and he talks about how Bitcoin is an asset of fear. And his point was when people are fearful, they look for some sort of safety asset, right? It's a flight to safety. So gold and Bitcoin historically have served as a great thing. If it's uncomfortable, if you're nervous, you go and you store something where you have confidence that it's going to still be there. And so his point was when the U.S.-China trade deal got announced, Bitcoin went down. Why? There was less uncertainty. There was more certainty. More certainty equals less fear. Less fear equals a lower Bitcoin price.
So does that sound like a bear market? Because we also have this. The FDIC issues the first ever official stablecoin proposal under the Genius Act. This proposal will allow banks to apply to issue stablecoins. We know this benefits Ethereum, this benefits Solana. The vast majority of stablecoins are built on primarily Ethereum and then secondarily Solana. Also, not to sound like a broken record, but the Clarity Act is coming. The US Senate today will vote/discuss the Clarity Act.
Mastercard just announced a stablecoin settlement with the ADI Foundation. ADI is an Ethereum L2 built on ZK Sync. So I don't know if you guys remember that. We spoke about this whole ADI chain previously, which had to do with the UAE, which is where I'm based, right? So the Sheikh basically pushing a massive stablecoin project with ADI. And ultimately, if you look over here, they will get integrated the ADI chain and stablecoin into their operations, reaching millions of users outside of TradFi system.
Not really an update. We actually got an odd switch here on Polymarket. And as you can see here, Right as we got to December 12th, in the middle of the day, we saw an explosion of the odds that Kevin Warsh would actually be the new Fed chief. Here you can see Kevin Warsh was trading at just about 10%, a little over 10% over the last few months. And you can see Kevin Hassett, by contrast, was between 70 and 80% for the entire month, leading many to believe that this was more or less in the bag. But then, boom, we see these rates start coming closer and closer until just today, they flipped.
It's really interesting that you even said that you're maybe less bullish on some of the big price predictions, at least in the near term, because I am too. I mean, we were at all-time high in 2021, November, 69 or so thousand. We've pretty much doubled in 4 years. And we've got people predicting 7 figures in the next 3.5, 4 years. I'm like, that's a bit of a stretch. I mean, I want to believe it.
This is the 2025 debt maturing, and a lot of it needs to be refinanced. About 10 trillion of that needs to be financed in 2026 alone. And that's a third of all marketable Treasury debt. The Fed needs to cut a lot more rate cuts coming, or deficits will explode, especially when they have to refi $10 trillion. And if they're financing that at 4%, they're dead. Anyway, that's the good news. So 2026, more rate cuts have to come, because they have to refinance it.
Just in, it looks like the Federal Reserve just pumped $5.2 billion into the U.S. banking system through overnight repos. This is the 6th largest liquidity injection since COVID and surpassing the peak of the dot-com bubble. So overnight, the banks, they need money, they need liquidity, and they can go to the Fed and grab that, and the Fed will actually put liquidity back in, and last night they did $5.2 billion worth of it, so that's good.
First thing is, we've had extremely tight liquidity conditions over the past couple of months on Bitcoin. Obviously, the US government shutdown exacerbated that. We are now finally seeing the Federal Reserve starting to inject liquidity back into the economy. So they just injected, and this was today, $5.2 billion into the US banking system through overnight repos. It actually makes it the 6th largest liquidity injection since 2020 and surpassed liquidity levels seen at the peak of the dot-com bubble. And you can see this on the Treasury General Account weekly change. So the account has dropped $78 billion over the last week, which is the largest liquidity injection since June. Now, the way these things work is, obviously they're not buying risk assets. So the downstream effects is more liquidity in the economy should end up flowing into risk, but this takes weeks or months to be baked in. So remember, markets are on a lag.
The unemployment rate's going up again. Yay-ish. 4.6%. Not great. 4.4% last month, 4.3% the month before that. It's accelerating. That raises risks. Now, the silver lining of the labor market continuing to weaken is that means rate cuts are coming, and that the next Fed meeting will see yet another rate cut.
Okay, so the last 24 hours, we saw the unemployment rate increase. Typically when this happens, things never end well. Firstly, the previous unemployment rate was 4.4%. The forecast was 4.5%, but it actually came out at 4.6%. So unemployment went up by 0.2%. And taking a look at the graph here, you can see it's on a steady increase. Now, if we take a look at it on a line chart, which makes it a little bit clearer, although the unemployment is still technically, full employment, it's at historically low levels, it is on the rise. And basically throughout history, when the unemployment has begun to rise, it's generally followed by a recession. Even in 2020, with that very, very brief recession, you had the huge unemployment spike, 3.5% up to nearly.
Extreme fear does not guarantee an immediate reversal. If macro conditions deteriorate further, especially through unexpected inflation data, delayed rate cuts, or renewed liquidity tightening, Bitcoin could remain range-bound longer than expected or revisit lower support levels. A sustained break below $89,000 would weaken the current structure and open the door to a deeper pullback toward the low $80,000 range.
Now, right now, the unemployment rate is starting to really move up. And if you think about it, last cycle in 2021, Bitcoin topped on a rising inflation rate, right? If you go look at Bitcoin in 2021, we know that it actually topped out as inflation was starting to spike. And we'll just overlay that right here. And so back then, you can see how Bitcoin topped out in November while the inflation rate was trending higher. This time, you could argue that Bitcoin has topped out there, not because the inflation rate is trending higher, but because the other part of the dual mandate for the Federal Reserve is trending higher, and that is the unemployment rate, right?
So really no interest there at all. No one's searching for it. In the case of Bitcoin, it's still on this relief rally at present. This is the short term again, looking very much only out for December and into Q1.
Now, what about our short-term projections based on the current price action? Well, unfortunately for the bulls, rising wedges, or perhaps you can just call it a bear flag now, either way you want to put it, rising wedge, bear flag, same shit, okay? Both bearish chart patterns. These form after larger downtrends and are regarded as bearish continuation patterns, and the research indicates right now that these patterns, of course, tend to break to the downside about 60% of the time. And they break to the upside, of course, about 40% of the time. So the odds say that this wedge, or perhaps we can expand it out to a bear flag now, again, either way, probably breaks to the downside, and the technical downside target is around $76,000. Yikes. The technical upside price, $109,000, which is a very interesting number.
There's effectively two camps right now. People looking at Bitcoin price action saying, hey, this looks just like prior Bitcoin bull market tops, with the 4-year cycle playing out in Q4 of the year after the halving. And that's precisely the price action that we've seen over the past few weeks. But another camp is looking at the ISM at historic lows, showing expansion next. Looking at spot market activity and how taker buys are now dominant.
But with that being said, taking a quick look at the Bitcoin liquidation heat map, and right now, if we're talking about what's close to the price of Bitcoin in the shorter term, honestly, we don't really have any significant level to pay attention to that's relatively close to the price, but we do have some massive liquidity starting to build at pretty much exactly or very close to $70,000 per Bitcoin, as we can see. So keep that in mind. That is a potential price target.
And the next thing to look at is the triple witching event, which only comes 4 times a year, around the 19th of December, or on the 19th of December, the same day as that Bank of Japan interest rate decision. So something significant to consider over there. And the last couple of times that we've had this, the last 3 times, have led to dumps.
What is the triple witching event? It is basically a quarterly event where stock option expiries, index option expiries, and index future expiries all expire at the same time here, and usually this tend to cause massive volatility. Now, for the last 3 times we've seen this, we've first seen a dump and then a big pump here, because basically very big positions maybe have to be getting closed there, or maybe have to be reopened, and that usually causes a lot of volatility.
So, did you enjoy the zap? Let me know in the comments.